Hello friends, Bill Miller from Waterstone Mortgage here, and I'm with Mike Jesowshek from JETRO Tax. How you doing today, Mike?
Good, Bill. Thanks for having me.
Absolutely. So we wanted to take a little bit of time today to give you some key value propositions on what the differences are between being a sole proprietor LLC and being an S corporation. And before we get into that, I wanted to just take a minute and ask Mike a couple quick questions about JETRO Tax. So JETRO Tax is a national accounting firm that is a digital accounting firm, essentially serving people anywhere throughout the U.S. And their main goal is to help people who are small business owners or real estate agents, or people that have their own small business, find ways to not have to pay so much in tax based on how they have their tax structure set up. So tell me a little bit more about your business, Mike. How long have you guys been in business?
Yes, we've been around for about 6 years now. We focus exclusively on small business owners, and we help them out with accounting, bookkeeping, taxes, and payroll. So those are kind of the main services that we focus on. Excellent.
So give me a little bit of a example on when you're working with clients that are doing payroll or bookkeeping, etc. What does that process look like for how you get the companies started with you?
Yeah, so our onboarding process is fairly comprehensive. Basically, when a client comes on, they come into, they start our onboarding process, and it starts with an email of information that we need from them. So we request information that we need to get the book started, to get prior tax returns and everything ready from there. From there, our team evaluates what we have for information already on file, and then we just kind of start the onboarding process from there. So if there's any kind of back work or anything like that that needs to be done, we'll handle it at that time. Otherwise, we move forward with the steps going forward, and then it's a pretty smooth process. It usually takes about a week to onboard a client.
Excellent. So another thing that I thought was going to be a really good idea that Mike and I could expand on this afternoon is to take a minute and help identify with just how much someone can save when they're going from a sole proprietorship LLC to, let's say, an S corp. So let's see if we can take a minute to expand on that, and we're going to give you some good examples on exactly how much you could save.
Yeah, so when someone's set up as a sole proprietor or single member LLC, the main problem that they're hit with is something called self-employment tax. And with a sole proprietor, single member LLC, 100% of someone's profit is subject to self-employment tax. So let's use an example. If you have, let's say, $100,000 in sales, $20,000 in expenses to cover that, you would pay self-employment tax of a little over $11,000. This self-employment tax is over and above your regular income tax rate. It's not something that can be deducted with credits or anything like that. It's something that you have to pay as a sole proprietor or single member LLC. So one thing that we encourage clients to do, and it's usually our number one tax strategy that we implement for about 90% of our clients, is use an S corp as an alternative to a single member LLC or a sole proprietorship. And basically with an S corp is that we take that net income or that profit from the business and split it into two parts. One is an owner's salary, which the owner is required to take a salary as an S corporation, and the other is a dividend. So if we take kind of that initial example of $80,000, we would maybe split that $80,000, 36 into a salary, and the remaining 44 would be a dividend. And the key thing by doing that is that you're avoiding the self-employment tax on the dividend or owner's draw portion. So you're still subject to essentially paying that self-employment tax on the payroll side, but you're able to eliminate that self-employment tax on the dividend or distribution portion. So in that kind of initial example where we had $100,000 in income, let's say $20,000 in expenses for a profit of $80,000, we would do a salary of $36,000, which would be subject to self-employment tax, and that'd be about $5,500 or so. And then the remaining $44,000, the owner would just take as an owner's distribution or an owner's draw, not subject to self-employment tax. So just on that example, from moving from a LLC, single member LLC, to an S corp in that example, they're seeing savings of close to $5,800. So
that's awesome. So in the slides that we have here in the video, it's going to definitely outline the difference being pretty substantial between an S corp and a sole proprietor LLC, it sounds like.
Yeah, and it's really for businesses of all sizes. So a lot of people will come to us and say, Mike, I'm too small for this. And usually we say if you have net income or expecting to profit anywhere from $15,000 to $20,000, tax savings out of there, they're real, they pay for the cost that it does to kind of make that transition. So we have business owners from very small to very big that this kind of setup works for them.
Excellent, and I'm really surprised to see as I'm helping my clients in the mortgage side, how many people are still operating off of a LLC or a sole proprietor, running off of like a Schedule C on their tax return, and the notion that this is almost like one of the best kept secrets for a lot of small business owners.
Yeah, and I think a lot of times, like I mentioned before, people think they're too small or think that tax savings are not available at a small business level, and that's just not true. So it's really kind of getting them aware of that and knowing the possibilities that they have with a relatively easy setup like an S corporation. And then taking that S corporation, it also allows for a lot of other avenues that they can use for other tax savings. So it's really just kind of that start of a snowball that we use for most of our clients for tax planning.
Excellent. Where can people find you if they want to get more information?
They can go to our website at www.jetrotax, and it's JETRO, or they can find our email in the link.
Excellent. So this has been our JETRO Tax accounting review. We're going to provide some slides and some information attached to the video message. If you have more questions for Mike, reach out to him, and thanks for watching.